Good morning, traders. Welcome to the Phoenix Blue morning update on Thursday, the 25th of February. As usual, we'll be looking at the Asian markets overnight, current open positions, new resting orders, and potential trading opportunities for the day ahead. This video comes out every morning, every weekday morning before 9 a.m. to UK time. We're going to focus today on our old favourite market volatility, with particular reference to the G20 meeting in Shanghai over the weekend. The G20 is a meeting of the heads of the largest industrialised countries, 20 of them, in fact, not surprisingly, from around the world, who get together on a regular basis to discuss the issues of the day. Now, undoubtedly, one of the biggest issues this weekend is going to be volatility in the markets and what is variously described as the currency wars. Added into this, Chinese leaders have overnight flagged up a need to for the information to the marketplaces to be more transparent, which seems to me a little bit strong coming from China, notoriously untransparent, and shall we say sometimes we're a little bit dubious of the data that they do produce. Okay, in terms of who we are, where we are, if you have any questions about this video or about Phoenix Blue in general, email us at info@phoenixblue.co.uk, Instagram Phoenix Blue Trading. We try to do regular updates through the day on that. We're on Facebook, the website's coming. I'm Tom Colley, I'm one of the trader coaches here at Phoenix Blue, and I'll be talking you through the markets this morning. Okay, well, let's go over to the news first. We've been saying all week, not a great deal of news, but we are very focused on speeches from central bank members, and here we have one at 12 a.m. this morning, Mr. Bullard from the FOMC, the American or the US central bank, speaking. So these are having a disproportionate effect on the markets at this moment in time. In terms of what else we have today, we have the pound, the second estimate gross domestic product. As it says, second estimate, not quite as significant as the first hit, unless it varies dramatically. Then this afternoon, we've got core durable good orders from the States and unemployment claims. So, as I've said before, a quiet news week. Over to the Asian markets. Here we have the dollar yuan, Chinese yuan, that we're looking at on a regular basis. Unsurprisingly, pre the G20 meeting, we are seeing still somewhat range bound, although to the upper end of this range, the range being created by this bar here, this big downward bar that was created when the Chinese government strengthened the yuan relative to the US dollar. Bearing in mind this is a controlled market, we're really watching this on a daily basis for an indication that the Chinese government are taking action, which at this moment in time is going to have a significant effect on the markets. Shanghai Composite, this is a composite of the Chinese stock markets. The red line, still the 2015 lows we've been looking at all year. What we saw yesterday was a sell-off, a close below the 2015 lows. Potentially this is just profit-taking prior to the G20 meeting, and the uncertainties surrounding that. So we'll need to see another close below after the weekend to make any clear analysis from that. Over to the Nikkei in Japan. Again, simply within the trading range that we've had since that, effectively since that revaluation of the Chinese yuan. Okay, Over to the dollar index. We talked yesterday at 1950 about it being a crucial level. Sorry, 97.50 about it being a crucial level. Price came up to that level. It broke through, but in the day's volatility, it was pushed back below to close just below 97.50, where when this slide was taken earlier this morning, we're still there awaiting some confirmation. Again, it wouldn't surprise me if we don't see anything significant this week prior to the results of the G20. Okay, Japanese yen, US dollar JPY. We're looking at the daily chart here. We put a call out on this low here, I think it was the week before last. We believed that the Bank of Japan were going to step in at that point. That was their line in the sand. They weren't willing to let the yen increase in value beyond that point. At that point in time, our evidence included key levels across almost all the Japanese or the yen cross pairs. Yesterday we saw price come back down to this level. On the Skype groups that our delegates have access throughout the day, a call was put out and we traded this position long again. It looks like the Bank of Japan have stepped in again. Maybe not quite as significant as over here because there wasn't the confluence with the other yen cross pairs, but our orders were placed, orders were triggered, first target was hit, stops are at break even, and we've taken profit off the table, no risk left in, which you will see particularly at this moment in time is very much a Phoenix Blue approach to the volatile markets. Now we'll see the same again here in the euro US dollar. We have had an order from this level at about 1.106 all week. This big bearish bar didn't pull back sufficiently to give us an entry. Price fell to this other key level here, and we've taken a contrarian trade at reduced risk back up to the original order up here. Again, stops are up, break even, money's off the table, no risk on the table, and in further profit there. At this point here you can't see the order line because it's covered by the take profit from the bullish trade, but basically we're looking to take profits here on the bullish trade and immediately switch to the bearish trade back down to this level, at which point we'll be taking profits again, and we'll look to either trade the range or look for a break below this level. So adapting to the volatility, smaller trades, quicker or smaller T1 profits so that we can get our stops to break even in an uncertain market. Okay, Aussie US dollar, we had a trade here from the day before yesterday when against a trend line we were trading a short bias at that point. That trade stopped out, so as always we tell you when we don't take winners. Our risks are always controlled. We only lose, or we only risk what we're willing to lose, and that's exactly what we lost there yesterday, or overnight yesterday, if that makes sense. Okay, where we are here at the moment, we still have an original order in at this level here, which was our main bias. That trendline trade there was again a contrarian trade at small risk. So we're looking for this potential channel. It's only marked lightly because it's not such a strong channel yet, but we're either looking for price to come up to this level where a resting order is lying, or if we see a break below 715.50.55, which is here, we'll be playing a downward bias, looking for a retest of that level. US dollar CAD, we've had this order in place basically since this low test bar or pin bar here created the level or reconfirmed the level. We're still comfortable in this trade, somewhat ranging at the moment. We'll remain comfortable until we're either triggered and stopped out, or we pass beyond the potential confluence here between the trend line and our support and resistance supply and demand area. Euro GBP, this is an interesting one. We've seen a strong devaluation in the pound this week following the Brexit negotiations and the announcement of the vote for the 23rd of June. We were looking at this trade last week, I think it was, and we were looking for a short trade. That was a trade that was purely technically based. We didn't have the fundamental bias to support that trade. However, it was a beautiful, beautiful technical setup. So we did take the trade, but unfortunately events took over and we were stopped out on that trade. We've now got a close above that level. This is the weekly chart. So we'll be looking for a pullback to that level to for a long trade, with our bias now being in the opposite direction. A, because this point of control's been broken, but also because the Brexit has come into focus, and will only be trading against the pound up until the conclusion of the election. Gold. Right, we showed you this one yesterday. Our bias in gold's been long basically all year. I showed you this symmetrical triangle yesterday. I said we'd be looking for a breakout, which we had in this bar here. We had a significant breakout, and at one point it looked like we might even get, you know, around these highs here, but we didn't. We then had a reversal in the whole marketplace. And basically we came back to where we started, but this level is still valid. As you can see, price came touchdown, so retested that level, which was what we were looking for, and now we have a bullish trade in the long direction. Okay, well, that concludes everything for today. Just on this slide, just an update for you guys who are relatively new to knowing about Phoenix Blue. Please, if you have any questions, if you need any more information, if you'd like to make an appointment to come and have a sit down with us and learn some more, that's totally without commitment. Please email us at info@phoenixblue.co.uk. Okay, that wraps up morning update for the day. Thank you for listening, and I'll look forward to speaking to you again tomorrow. Take care.